Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking solely on the 60-day cycle that I've been going through over the last few months. And whilst it looks like there's nothing going on with the Bitcoin price, I can assure you that in the charts, there's a huge amount of developments that are going on. And I'm going to give you some sort of an insight into those. I'll also have a look at the Hikake pattern and see exactly where that is and see how that fits into the 60-day cycle that we're currently going through. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. I'm just giving you my perspective and how I see the charts. So please do your wider research before you make any investment decisions. Okay, so with that out of the way, I'm going to start off on the daily chart here. And these are the previous few cycles. So if we start the cycles here, at this bottom at the end of the 60 days here, that was a 66-day cycle previous to that. And since then, we've had a 62-day cycle, 56 days, 63, and now going forward, we can only look at the 60 days and see if that's going to be 60 days over here. And in between the 60 days, we've got this mid-cycle 30 days, which gives us the idea of whether we're going to have a left translated cycle or a right translated cycle. And if we top out before the 30 days, that's a left translated cycle, which is usually bearish, which means that it's got a lot more days for it to come down into the 60-day low. And if it's past the 60 days, then it's got less days to come down, which means that we more than likely, with a higher degree of probability, will bottom out on a 60-day cycle higher than the previous 60 days. So that's how it works. So really, this 60-day cycle is just a foundation, a template to work on to give us some idea of the direction of travel for the Bitcoin price. So this is currently where we're at. The FTX candle was this candle here, which bottomed out at 63 days from the previous cycle here. And if we just focus on this element over here, currently this candle here, which is now obviously red, from this end of cycle, we've come to now 29 days. So we've got tomorrow to make a higher point than the 17,400. So if we have topped out on this candle here at 17.4, it's obviously come before the 30 days. So it's a left translated cycle, which is very critical because we are at the end of a bear market. Whether we like it or not, if we look at the bigger picture of the previous 12 years, we usually bottom out in December, and we are currently in December. So the next cycle, the next 30 to 60 days is absolutely critical to see whether we're going to make a new lower bottom from this one here, which is around 15.4. Well, it was this one here, but you know what I mean. Or we make a higher bottom anywhere above this point here. So we're trying to ascertain exactly what could possibly happen here to give us an edge in the market. We know from previous cycles that within the first cycle, we had two bear markets. The first one ended in November in 2011. The second one bottomed out in January. The third one bottomed out in December. So we know that every bear market seems to be ending around about the December time frame. We also know that the fall in the bear market has been going down in terms of the percentages. So this percentage was around about 93-94%. This fall was around about 85%. This fall in 2017-18 was around about 83%. And currently, this fall is around about the 77% mark. So a lot of features of the 12-year cycle that we've got with Bitcoin divided into the 4-year cycles is telling us that its characteristics are such that we are about to bottom out here. And we're looking at tentative signs which give us an edge in the market. And that brings us to the 60-day cycles and why this is now absolutely critical the next 30 days or so. Okay, so currently what I'm waiting for is some clarification in this region here. The question is, are we going to get back above the 17.4 that we made here on the 26th day at 17,424. It doesn't look as though we're going to go there. And the reason why I'm saying that is that there's a lot of bearish pressure currently on the daily chart, despite the Hikake pattern that I've shown you in the last couple of videos on the weekly chart. It doesn't seem to be playing out currently. However, this is where the confusing picture is. There's a lot of bullish and bearish pressures bearing down on here, and we really can't say one way or the other where this will go. Because if you look at the RSI on this daily chart, you can see quite clearly that we did make a lower low here, but a higher low over here. And that's led to this price action, which has gone to the upside. But even on the weekly chart, we can see quite clearly that we made lower lows here and higher lows on the RSI over here. So again, there is bullish pressure. So that would suggest that we should move higher in the next few days and weeks. However, if you've been following me on Twitter, and I'm back on Twitter now if you want to start following me again, I've been leaving the last few messages here since yesterday that on the daily chart, this was our top so far, which is at 17,424 on the 26th day of this cycle. And what we did was to print an outside bar candle, this big long wick here, to the bottom of this wick here, which is the high and the low being greater than the previous high and low of this candle here. So that gives you an outside bar candle, and because it closed below the close of the previous candle, that gives you the outside bar characteristics that this is now bearish. So I was watching this outside bar candle and left a note that invalidation of this outside bar candle would be a close above the 17,424, and a break below the 16,865 means that the outside bar candle is playing out, but may take a few days of price ranging in between these 2 points. So watch out for a rejection around top and bottom until it breaks in a few days. Well, this price action then went on to break last night. And what we've now got is, as I've said here, the outside bar is weaving its magic wand and breaking to the downside. It's a daily candle, so we could still get a wick back in the range. Otherwise, the target is 16,400. And last night, this actually closed below the actual range of this outside bar candle. The bulls did try to push it up, but it still closed below the range, which means that we've now broken this, and in the next few candles, we should see a move to the downside, and the target I've got down here is 16,423 to match this green Marubozu candle that we got over here. So this is the outside bar candle over here, and this is the candle that closed last night below it. So we're expecting the price to come back and find support at this level here, around about the 16,400 mark. So while we're waiting for this 30-day mid-cycle point to play out, what we're really waiting for is that the next 30 days, this is going to be a critical period to see whether we're going to have one more leg down below the 15,400 level, or we're going to make a higher bottom anywhere around here. Most of the on-chain data is saying that a lot of the sellers are now sold. Those who wanted to sell have sold. And this would suggest over here, the momentum to the upside on the daily and the weekly charts would suggest that smart money is now accumulating at these levels around here. So for me, any move down below the 15,400 into this cycle 60-day low over here would present a very good buying opportunity. Please remember, this is not financial advice. This is what I'm saying that I'm doing. This would be seen for me anyway as an opportunity. And the actual 60-day cycle comes to an end around about the 8th of January. If it doesn't actually go below over here from the 15.4 level, I would be seeing this, a higher low over here at any point above the 15.4. If we do this, that would be a very strong indication that we have actually bottomed out at the 15.4. And in terms of the price action, not a lot is going on in terms of the volatility of the market, but the developments in the candlestick patterns, etc., is very interesting. So we just have to be patient and actually let the market resolve itself and let the process just take place as it's unfolding over here now. And of course, most people have now got worn down by the bear market, which is what it's designed to do. It's designed to make you give up, and looking at the number of people who've left the crypto space, it's being very successful at doing that. Everyone I know actually rode the market up and has ridden the market down. So they made a lot of money on the way, but they've lost it all down on the other side. And obviously that's going to make people very, very disheartened, and that makes people give up. But it can actually make you overlook the great opportunities that are lying ahead over here, just like they were over here. However, I have to give a note of caution here, because whilst I see the opportunity over here, one thing I am really worried about, and I've mentioned it many times in my videos, is that we could well be in a bearish super cycle which means that we could have number of legs down to whatever price you want to give. That can be anything down here. So there is that level of understanding and caution that I have in the back of my mind. But in the absence of that, this is a great opportunity over here presenting itself. And we mustn't discount this opportunity just because we're feeling disheartened due to this play of the price action. So all we can do is keep an eye on the developments, especially on the long-term time frames. And talking about the long-term time frames, on the weekly chart, I've been showing you this Hikake pattern developing over here, with the long Marubozu candle to the downside being the inside bar candle to this next candle here, which was followed by a lower high and a lower low by the third candle, which gave us the Hikake setup, so that in the next three candles, and this is what we've got to be aware of, is three candles here. The first of the next three candles, which finished on Sunday night, it will only process itself when it breaks above this second candle, which is at 17,170. So we tried multiple times during the week to get above that, and that was rejected. We're now in the second of those candles. Again, as you can see, we made another attempt in the last few days to get above it, and we got up to 17,424, but the red candle here is telling you that we're being rejected again here. And the outside bar candle that I've shown you on the daily chart seems to be playing out with the pressure to the downside. However, we still have one more candle to go next week to see whether that goes above the 17,400 level. What would invalidate it is to go below this candle here of 15,790 around here. So lots of confusing messages. On the RSI, we've got bullish divergence. On the price action chart, we've got a Hikake pattern developing, which won't resolve itself until next week. And then on the daily charts, we've got an outside bar candle, which seems to be playing out to the downside as expected, with a target of 16,400. And we've got this 60-day cycle at play, where if we have topped out here at 17,400, then that gives us more days for it to go down and make a lower low for the bear market bottom. My own honest opinion, when you look at the overall bigger picture, the major concern I've got is that the fallout of the FTX scandal that brought us down to these levels here, I don't think that the contagion of that, the after effects, the side effects of all that, with so many other exchanges and big players caught up in this, that may not have fully played out over here yet. And if we do get another big exchange, and there is talk that Grayscale or Genesis might be in the similar position to FTX over here, then that could be the catalyst that brings us to a lower 60-day cycle bear market low. And that could be anywhere around between 12,000, 10,000 or even 14,000. So those are the levels we have to look for down here. It would be interesting to know where you stand. And of course, I'm going to get many different opinions, and no one knows the future. All we can do is go by the charts and give us some sort of an insight into what narrative could play out over the next 30 to 60 days. Okay, so we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you want to leave any comments, questions or suggestions, then leave them in the comments below. And if you want to follow me on Twitter, where I will be leaving some charts and other bits and pieces regarding personal development on a more regular basis in between my videos, then I'll leave a link in the video description below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.